ELI 5. How does the IRS know if I don't report half of my income? I own a handyman company, and get paid in checks made out to my business bank account or in cash. If I were to only report half of my jobs and income to the IRS, and my tax accountant, how would the IRS know? So first of all, forget about your tax accountant. They work for you, not the IRS, but at the same time have a code of professional ethics not to lie to the IRS. So simply don't tell them and they won't go looking. The IRS, on the other hand, at first, they likely won't know. And to a degree they may never know. But there are ways that they catch people. Most of my tax work is Canadian, but the basic principles are the same. First things first. Once they suspect something is up, they'll do two things. First is they will get your banking records showing all the deposits. You might say, well then I'll do everything in cash. And that brings us to the second thing, a lifestyle audit. A lifestyle audit is basically where they look at the things that you own, and all the things that you pay for and use that to calculate what your income should be. From there the burden of proof passes to you to show how you can afford that stuff on the income you've reported. It's also worth noting, dealing exclusively in cash can make certain things really hard, like buying a home, getting a mortgage, or even a car loan, because your reported income is rather low. These audits are difficult to fight. So really once things get to a lifestyle audit, the tax authority is basically convinced that you are cheating, and they are looking to figure out by how much you are cheating and how much they think you should owe from that cheating. But like I said, those things happen after they catch on to what you are doing. There's a few ways that they can catch on though. The first way they would catch you is that someone reports you. Pissed off customer, an ex-employee, an angry neighbor or family member. That's how they catch most people. The answer here might be, just don't tell people. And for the most part that's true, but it's hard to maintain a lie like that for 10 or 20 years without people eventually coming to suspect. There are also reporting requirements for large money transfers. The IRS compiles those and eventually a computer matches them up with income tax reporting. So a client transfers you $20,000 for a new desk and someone from the bank sends a form to the IRS who eventually wonders if this income was reported. Next there's random desk audits. This is where the IRS will request a small part of your documentation from your income taxes. It's not a full income and expense audit, but it's just one small part. Through that they can sometimes catch on to unreported income. Next way is that one of your clients claims your work as a tax expense for one reason or another, like you do work for a business and they claim it as an expense. Then they get audited, and as part of that audit the IRS will trace all of the payments they made to ensure that the income was reported by the party that they paid. Next way is that you, as a business, want to maximize your claimed expenses but underreport your revenue. The IRS does calculations based on your industry to determine what the normal range for expenses as a percentage of revenue is. If you fall outside the normal range, they'll start asking for proof of expenses and want to see bank statements. So if you expense too much lumber for the amount of revenue you are bringing in, they'll eventually catch on that way. There's other ways as well, but those are by far the most common. Once they think you are dealing in cash, they'll start the process of a lifestyle audit, and by then you are basically fed. So to recap, people will rat on you. The bank will rat on you. In the case of larger transactions, your customers will accidentally rat on you once they get audited, and lastly your own tax returns ratios won't adhere to your industry averages and will eventually trigger an audit. Also, since this is not just an accident but actual tax avoidance, it's the kind of thing people go to jail for. People make mistakes on their taxes and just have to pay money that they should have paid. But if the IRS thinks you actively tried to lie to them, they'll bring the hammer down. Auditors live for that shit since they spend way too much time catching normal people who didn't think they were doing anything wrong, finding someone who's an actual criminal really gets the juices going.